Leap of Faith podcast fans. Welcome to this week's episode with yours truly, Randy Silver. This week, this episode is all around cryptocurrency and blockchain. We're going to talk about what is cryptocurrency, what is blockchain, how do you buy cryptocurrency, how is blockchain the backing of cryptocurrency, what is Bitcoin, what is Ethereum, what's that meme, Dogecoin, what's that meme, Shibacoin. Is it good investment? Is it bad investment? We're going to go all around cryptocurrency. So I'm excited to talk about that. I have my friend and the cryptocurrency expert on, Colin Thompson, to talk about it. Before we go into cryptocurrency, as I do with every episode, just want to say to my listening audience, thank you so much for listening every week. You guys give me amazing feedback. You've loved all the episodes that have come out. You're loving the videos. So please keep subscribing on Apple, Spotify, Google, Pandora, however you're listening. Please subscribe on YouTube. You get the vlogs every week. You get these videos live, as you can see. I have much more on the YouTube, such as working out videos and things like that. So thank you so much. All the feedback you give me, I love it. I love it. I love it. And it means a lot to me. I enjoy this and I do this for you. So La family, thank you so much. Now we can get the cryptocurrency. So I'm just going to bring Colin Thompson in. Colin, welcome to the podcast. And let me tell them a little bit about you. Colin has created multiple cryptocurrencies, LPC, LGS, and XCZ. He'll tell us about that. He also co-founded an online education platform, www.XChainz.io. It's www.XChainz.io. And it is backed by blockchain and powered by our own cryptocurrency coin, XCZ. It's created and listed on several exchanges. What other qualifications does he have? If that's not enough, he's a certified blockchain expert. He's an IBM blockchain consultant. He's an IBM blockchain essential. He's going to talk about everything we need to know around cryptocurrency, around blockchain, all the different coins, and to help you educate yourself on cryptocurrency. So with that being said, I'm going to say good morning to Colin. I've been based in San Diego, as you all know, but he's actually in China. So Colin, good morning to you.
Hey, Randy. Great to be on. Thank you for having me on your show. And it is nice, bright and early here in Shanghai, China. And I think for today's episode, today's podcast, today's interview, the name of your podcast is spot on, Leap of Faith, because so many people who are now interested, and not interested, but actually investing in cryptocurrencies, the vast majority of them are taking a leap of faith. And when you take a leap of faith, you're hoping and wishing, right? As opposed to doing something based off of data and knowing. So I think we have a good set of information to share with your audience today. Thank you again for having me on.
Yeah, my pleasure. And then a lot of people see it as like the modern day gold rush. Oh my God, I can strike it rich really quick. Go find some gold. Obviously, you're not pining in the mountains trying to hopefully on your hands and knees find some gold in the river. You're just putting your own money into a cryptocurrency and hopefully it hits you big. So I think that's a great thing to start on, but let's just go over the basics really quickly. So I'm going to kind of do some rapid fire questions just to get the audience some basic level understanding before we take it a step deeper. So very high level, let's just say, what is cryptocurrency?
Well, would you mind if I start with blockchain?
Yes, let's start with blockchain. No problem.
Yeah, as a blockchain guy, right, it's sort of like saying, starting with what is racquetball before talking about what sports is.
Okay, so I love that. I love that. So let me re-ask the question then. That way we can make sure we get it right. So Colin, let's start here. What is blockchain?
Yeah, so that's a great opening question. And I'm going to try to make this very simple and not get too technical. Blockchain is really a digital ledger. It's a record-keeping book with a growing list of records called blocks. So these blocks are linked together using cryptography. And cryptography is just a way of embedding a long string. So if you look at what one block is in the chain, so one block is really a list of records, of transactions. It can be thousands of transactions go into one block. The next block has, again, thousands of transactions. These are linked together using cryptography. So each block contains a hash, and a hash is a string of numbers and letters. that links that to the next block. So that keeps happening. Every few minutes, another block is made to block 1, block 2, block 3, block 4, and it keeps going on. And they're all linked together using cryptography. Now, they're linked together in such a way that the data cannot be changed. And it's because all this data exists on every node. Every node is everybody's computer. Not everybody, but a lot of computers globally have these records. So you cannot go back and change them because you have to change the data on pretty much every computer. Now, here's the interesting thing. Blockchain was created by a person or persons named Satoshi Nakamoto in 2008. And to this date, he has never, or they have never come forward and say, hey, we are the creators of blockchain. We are Satoshi Nakamoto. What happened was he put a white paper out back in 2008, which described what he was doing. Now, cryptography has been around for years. However, what he did, he used cryptography to help create Bitcoin. And Bitcoin was literally the first cryptocurrency. And really, what Bitcoin did, or using blockchain, was to solve the double spend problem. And the double spend problem is very, very simple. If you consider what happens at your bank, when you go to the bank and make a transaction, you pull money out and you go to Target and you buy something. The bank has that record of transactions. Now, if we're doing this with a digital currency, because it's digital, we'll stop me from copying that currency and spending it more than once, because nobody has a record. So by having this public record, where the record is on all the nodes, you eliminate the opportunity of double spend. That was really, really big, because now this is the first time that individuals can keep track of the ledger. You don't have to go through a big financial bank. And that was the main thing. Now we have the power to manage how we spend without any organization being involved. And that's really the backbone of cryptocurrencies. Cryptocurrencies are sort of a workaround the big financial institutions. You don't have to go through, this big financial institution who's tracking your spend, who's reporting your spend to the taxes, to the IRS or whatnot. Now it's really between person A and person B. That was a major thing, because now, as long as we both believe the currency has value, right, we can start spending it and using it as a store of value. So that was a very, 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 very big thing. So that's a very high level of what blockchain is. And just really, 3 more things about blockchain is very important. One, it's decentralized, meaning no one person owns it. Each member of the network has a copy of the same exact data on the computer, which makes it very hard to change. All transactions are fully viewable. So every transaction that is made, you can go back, you can see. Now, you won't see who made it. You'll see, for example, a string of characters that represents a person, but you won't see a person's name, but you see every transaction that's being made in an open public ledger. And then finally, it's inedible. It has immutability, meaning the records cannot be changed. And those are 3 very important things. And we call these the 3 pillars of blockchain technology: the decentralized, transparent, and immutability, meaning it can't be changed.
Yeah, so a quick follow-up to questions that then, is all cryptocurrency decentralized, or is there some cryptocurrency that is centralized?
There are variations. There are variations. There are some private blockchains that have their own token. Ethernet, for example, is decentralized, but Ethereum is centralized, but they also have their own ecosystem. So in order to use Ethereum, you must buy into their platform, for example. So there are some that are centralized and some that are decentralized.
Got it. So then now let's take it to that first question: is, if we understand the backing of blockchain now, what is cryptocurrency and how is it now readily available for, say, a random individual to use?
Yeah. So a cryptocurrency is merely a medium of exchange that is digital. It's digital, encrypted, and decentralized. Unlike the US dollar or the euro, there is no central authority that manages and maintains its value of a cryptocurrency. Instead, these tasks these tasks are distributed among the cryptocurrency users via the internet. So nobody is saying what the value of the cryptocurrency is. It's really based on the demand and the users. What is a person A willing to pay? It's strictly about supply and demand. Now, most cryptocurrencies, most, not all, most will have a limited supply. So for example, Bitcoin, which is one of the most popular cryptocurrencies, I believe every, I want to say 2 minutes, every 2 minutes, a new block is put out there. And that block is going to generate X amount of cryptocurrency, X amount of Bitcoin. So every 10 minutes, every 10 minutes, every 10 minutes, a miner is rewarded with new BTC. So I believe we have about another 30 years, I think, and then there'll be no more Bitcoin put on the market. So most of the currencies have a cap. So people now are saying, well, it's not like gold, because gold is gold. Well, you all be able to find more gold, but BTC and cryptocurrencies have a limited amount, which should mean that due to scarcity, the value should go up. Yep. Now there are some cryptocurrencies which are based on nothing. Okay, for example, like Doge. Yep. Doge has no limits. Doge has unlimited quantity, which goes against some of the structures of cryptos because you want to have scarcity. But due to how the social media and the hype is, Doge actually gets attention now, which is all a cryptocurrency needs, is attention. They don't follow the regular tenets of smart investing and smart assets. They now simply just need followers, but we do believe that's going to be short-lived. We don't know how short, we don't know how long, but cryptocurrency should follow several standards. One, limited access, limited quantity, and definitely it should have a value proposition, which most don't at this point. And I think you asked a question about how people can buy it, or
yeah, like there's obviously what I know of, there's Coinbase, there's crypto.com, there's other coin exchanges. How do people know where to go buy it and how to safely do it? And I know there's also a second part to the question is like, sometimes you have to buy like Ethereum chain to then go transfer it to like a Shiba. So like, why can't I sometimes buy coins directly? I have to buy a different type of cryptocurrency to then buy a coin.
Right. So let me first say that the best way to look at how to understand how to purchase a cryptocurrency is honestly go to YouTube. Go to
YouTube University.
Type the question there, and you will see. Yeah, you will see videos that tell you how to do it. Because I can tell you, you can go to Coinbase, you can go to Binance. There are several different platforms we can go to purchase. But I think it's important before you do that, watch a video on how to do it, because you'll learn a few things first. And I tell folks, the first time you invest with $50, $100. Invest and learn how to use the platform. Learn how to watch your investment over a few weeks before you start investing real money, because there are little things you want to learn about: how to withdraw, what are the fees when you withdraw, what are the tax implications when you do move money from wallet A to wallet B. So several things you want to understand before you start putting in what we call rent money and big money. You want to understand those things through and through. And you asked another question about how to purchase, and what was the other question?
Yeah, sometimes like say you want to buy a coin, you have to buy a different type of coin, then exchange it for the other coin. So I would love for you to talk about that a little bit.
Yeah. So when a coin is added to an exchange, an online exchange is similar to a trading platform where you can go in and trade for another cryptocurrency. Now, if you go to, say, a Coinbase, if you go to Coinbase, you can purchase the coins they have on their platform, and they have, let's say, 10 of the most popular cryptocurrencies. You can purchase that. You can take dollars and buy into those. Mm-hmm. Now, some platforms you cannot do that because they're not tied to your bank. So let's use a Binance, for example. Now there's Binance.com, and now there's Binance.us. And the main difference in these two, Binance.com is not tied to your bank account. So there's no way to do what? To move US dollar into that account to buy. Now, because the US really wants to make sure they can somewhat manage what's happening for US citizens, or people living in the United States, I should say, Binance was forced to open Binance.us. So if you're logging in from a US IP, they're going to say to you, you must use Binance US. Now, Binance US, like Coinbase, you can link to your bank account, which means you can now buy cryptocurrencies using US dollar. But let's look at Binance.com, which has no way for you to bring in US dollar. You then have to transfer coin from, let's say, Coinbase, and transfer that from the Coinbase wallet into your Binance wallet. So let's say, for example, we have 1 BTC in Coinbase. We transfer that 1 BTC from Coinbase into my Binance.com wallet, and I have 1 BTC. Now, BTC has to have a pair, and most coins that are not BTC, that are not Ethereum, don't have multiple pairs. What you're doing now, you're saying, I want to take my 1 BTC or some BTC and purchase and trade for some Ethereum. Let's say I want to take half my BTC and get the equivalent in Ethereum. That's a trading pair you have, trading pair. What you may not have, though, you might not have a Shiba and a trading pair of, let's say, XRP. You're not going to find Shiba and XRP because not enough people own those two that want to actively trade. But a lot of people own Ethereum, a lot of people own BTC. So you're probably going to find a way to trade BTC directly into Shiba and BTC directly into XRP. You can trade BTC with most cryptocurrencies. You can also trade Ethereum with most also, but the smaller ones don't have a lot of pairs. The small ones usually have maybe 2 pairs, and those 2 pairs are usually Ethereum and BTC. So if you own Shiba and you want to buy XRP, Ripple, you first have to trade your Shiba with BTC or Ethereum, and then Ethereum or BTC into XRP or Ripple. Because again, the smaller coins don't have many trading pairs. Does that make sense?
It makes great sense. I get it. So basically, for you to go from option A to option C, you need to put in option B because option A and C don't combine, but B and C do. So you got to make sure you're able to get it.
They don't link.
Exactly. So then,
exactly.
And I think that's a good way to segue to this question is most people know Bitcoin, Ethereum. Can you talk about why those are 2 of the biggest players in the market? And then you brought up Dogecoin and Shibacoin. And then also, you have your coin as well, LPC, LGS, and also XCZ. So can you talk about how those play in the game and say, like, obviously you have some tangible factor. You want your coin to be the next Ethereum and whatnot.
Right, right.
How did you, I'll take for the third question is like, how did you create your own cryptocurrency? And like, what do you do to try to get momentum, say as a Dogecoin where it blew up and now it's kind of tapered off a bit?
Right. So to create a cryptocurrency, it's really just, the first thing you have to do is create your blockchain. And again, not to avoid, but your audience could go onto YouTube and find a course on how to create a blockchain. A blockchain is strictly software. It's software that you can enable. And once you enable it, you're running in the background. And once you have more people who join your chain, and when they join your chain, they become a node on your chain, meaning they help to manage your network. At that point, if you have a token, because not all blockchains have cryptocurrencies, but if you have a token, you're pretty much going to say, you know what, I've created a token. Here's a token. And the way my blockchain is set, my chain is set up, every minute, we're going to generate X amount of tokens. Like, and we're going to do this.
I got my Bitcoin token right here.
Yes, except you can't do it in physical form.
Yeah, it's right? Not tangible. Yeah, I got you.
Right. So now we're generating this new token every few minutes, and if people think that the project is worthy or this has money, people then will do what? They will buy it, or people will sell it, and people buy it.
And now you got the demand. And the demand makes the value go up.
Right, and you asked about how do you how do you get that initial demand?
Yeah. So like
Well,
you have 3 coins. So like, there's hundreds, if not thousands of coins out there. How are you getting people to drive to your coins?
okay. So the first two coins, LPC and LGS, they are still they're still alive. I don't know if they're on an exchange anymore because we left the projects about a year and a half ago due to not being able to control the projects. So my partners and I founded XCZ, which is now on a few exchanges. And the question is, how do you publicize and get communities around your token? That's a great question because you have a challenge of you have most people who invest in your coin early. They want to do what? Take a guess what they want to do.
If people invest early, they want to make it rich. Like, like they want to invest at like 0.0004 and hopefully hold to
Right.
get to $1 and they have 100 million shares and they're
Right.
massively rich.
Right. They want to make money. Because we're running a project, we have an online educational platform, and our token it will be the gas for that. It makes sense. We want to build a platform, get clients, run a business, not just make money off our token. So it's hard to market when you're still building a platform. Right now, our platform is still being developed. So we're saying, do we put our focus on hyping up our token or put our focus on building up the platform? We believe it should be building up the platform. So we have an application people can use, get clients who are coming, paying money, the money comes into the business. With the coin, with the token, so the organizations don't make money off tokens, right? So the people who invented Shiba, BTC, not Ethereum is different, but they're not making money when people buy into the coin. So to answer your question, how do you get people to know about it? You do a hell of a big marketing campaign. Marketing, develop these communities, Reddit, other social media accounts, the Telegram, what's the other one? Telegram, Twitter. You tell people about it, you give them free coin, you get on exchanges. Now, to get on an exchange, okay, to have your coin on a Binance like a year ago, that's like $50,000-$60,000 just to get your
Oh, wow.
token.
I did not know that.
Yeah, just to get on. Now, go back to 2018, it was like $100,000. Okay, it is very, very expensive. And Coinbase, it's like a lot of money. So one, you first have to be willing to invest this money to get on the larger exchanges. What typically happens, coins will start on a smaller exchange, build up more hype, shows other exchanges that we have a lot of volume, people buying and selling a lot every day in the millions, and then you make it invited to go to the big boys. So you have to, there are different levels. Most tokens though, for example, Shiba. Shiba was founded by one of the Ethereum founders. So his name is very, very popular. So when he says, hey, I'm doing this new token, he won't go the old school way of doing it in Telegram. He'll go to Reddit. He'll go to these other platforms that people are paying attention to now and have millions of people invest just because, wow, we saw what happened with Doge. Maybe this is the next Doge. So right now, there's a lot of hype in the market, not really backed by data. But if you are a name like Elon Musk, if you are a name, you can pretty much say, you know what, I have this new token, and people will say, hey, so-and-so is involved in, I want to be involved in also, and they'll put some money in it.
So that's great. And like, I think you're hitting on the point that I want to take to next is like the volatility of the cryptocurrency. Someone like Elon Musk can tweet about Ethereum or Dogecoin or Bitcoin, and it makes the value drop or go up like $4,000 or $5,000 like instantly based off of his saying it. So can you now talk a little bit about the volatility and like, is it a safe, sound investment and things of that nature?
Well, I think anything that has high volatility is not a safe, sound investment. Because if you have high volatility, that means you have peaks and valleys, then peaks and valleys, and then peaks and valleys. and nobody knows when you're going to peak, when you're going to valley. So unless you can time the market, you know when to sell and when to buy, odds are you're going to be a victim to the volatility. Now, one of the things that I think we're seeing now is that there's always going to be some noise, some background noise, but things tend to settle back in. So back from, I would say, February through perhaps early May, there was a lot of volatility. No, there was not volatility.
No, it was upward trend. It was upward trend.
Right. Upward trend and a few dives, but I wouldn't call it too volatile. And people said, here we go. This is never going to stop. And then, as you mentioned, a few people said a few comments, made a few comments, and you saw things taking a nosedive. But huge. What people don't realize is, yeah, it's huge. But most folks, you know, so Randy, how long have you been watching cryptocurrencies, monitoring the prices?
Probably since 2015. I didn't invest in 2015. I wasn't a believer, I guess you could say. And also I was fresh out of college. I didn't have, as you said, rent money to just go ahead and throw into something I didn't believe in. But I would say the past 2 years, you know, I've probably put in what I would put into the normal stock market. I've tried to put in the cryptocurrency as a way to hedge my investments in the stock market.
Okay. So you've been watching it. The point I'm trying to make is there are people who just started watching it, let's say, well, they saw it in 2018, they saw it, but didn't pay attention to it. Well, they did, but everything dove and got very, very quiet. And then this year they're looking at it and they're saying, oh my God, ETC got killed. It's down to 34,000. And they're like, okay, this stuff is crazy. It was almost at 70,000 a few months earlier. It's taking a beating. But what they don't realize is, go back 1 year, it was about 3,000-4,000.
Mm-hmm. Yep.
Yeah. So this is it's doing tremendous, but it's the noise of people seeing what's happening based off hype that has them thinking this may not be a good investment. I think this is a good investment if you do two things: buy in at three things. Buy in at a low when it's not peaking at a low. Consistently put money in, maybe $100 a month. We're not talking big money here. Maybe $100 a month into cryptocurrencies, and do this: leave it the F alone. Okay, leave it alone. Don't look at it on a daily basis, because what happens to a lot of freshman, junior, senior investors is we get too emotional. We get too emotional. And what I mean by that is, if we see that, if we got in Bitcoin, let's say at 30, and next month it's at 40. And as you know, if that was a regular investment in the stock markets, people say, you know what, go ahead and start pulling out a little bit of your profit, just, you know, to make sure you get your investment. Don't just let it ride. You have your sell, we want to sell. Pull some out. But in cryptocurrencies, because it happens so fast, in traditional stock market, if you're gonna go from a stock value of say, now I'm not talking about Tesla. Tesla's different, right? But if you're gonna have a stock that's $100 now, 6 months later, it may be 110. It's not gonna be 300 6 months later, right? You're not gonna have that gain typically. But because it happens so fast, cryptocurrencies, people are like, oh my God, it grew. And instead of making a sound decision and starting to pull some of your initial investment out, FOMO comes in. And you know FOMO?
Yep, fear of missing out.
Fear of missing out. And it hits me also. And I tell you, so tell your audience, what is FOMO? What does that mean, fear of missing out?
It means that, you know, something really good is happening. Say your friends are at a concert and you're not there, and you're like, dang it, like they're having so much fun, and it gives you like anxiety and stress that you're not there with them. Or in terms of cryptocurrency, you didn't invest at 30, you thought it was too much. Now it's at 40, you're like, oh my God, like I need to invest, but I don't have that money. Now it's at 50, and you're like, dude, I could have made $20,000, but I didn't do anything. So it's that stress, anxiety you get from not being a part of the movement or whatever is happening.
Right. I will call that your example of the frustration of missing out.
Yes.
Right?
Okay.
But fear of missing out is, if I invest in say BTC at 40, now it's at 80, and I know for a fact it's doubled in 1 month, I should pull some out. But the fear of missing out is, well, heck, if it doubled in 1 month, it may double again in 1 more month. So I'm not going to pull anything out. If I pull, say, 5,000 out, that 5,000, I could be missing out on another 5,000 on top. Plus that. So it's the fear of the fear of missing out that additional growth. But you have to ask yourself, how greedy is being greedy? Because now we're being greedy. If you double your money in 2 months, in 3 months, you got to pull something out. What happens is people don't pull out and they think about it. And then as in cryptocurrencies, it goes back down. And as it's going back down, they say, well, I can't sell because
of that FOMO.
Either it may go back up, or I'm not going to make as much as I would have made before. So they keep the money in there, and then when it goes back down, low down, they say, you know what? I gotta sell. I gotta sell because I gotta make something. So I come in at 40, it goes to 80. I sell at 45, 40, 30. I sell at 30. I've lost money. And now I'm saying to myself, okay, one, how do I tell my spouse I've lost money? Why am I so stupid? Right? And then it's funny because once they sell, it shoots right back up. And they say, well, I can't go back up. So for young investors, what they do is they tend to buy in a peak, they buy at the high, and they hold on to it, and they tend to sell in a dip. And as you know, you're supposed to buy in the dip and sell at the high. So, and people who are in traditional stocks, they do that, but we're finding a lot of people, and you don't hear about these people who are losing a lot of money. We call it, they get stuck holding the bag, right? They get stuck holding the bag because they've invested, and once they invest and it's high, smart investors do what? They pull out because they want to dip. They pull out a lot, flood the market, dip it, put the money back in, and they've almost doubled their money buying, and now they have even more of that, more quantity of that cryptocurrency. And folks think that's what Elon did. I don't know. I don't know.
Who knows?
But it's a smart investment way of investing.
Yeah. So let me ask you this question, because that's a really important point. You're talking about, hey, $100 a month. If Bitcoin's at 30,000 and $100 of Bitcoin at that point, it's like I'm buying 0.0005 of a Bitcoin versus Shibacoin, where it's 0.00006 cents versus Dogecoin, where it's 30 cents. Where's that $100 best put? Somewhere where it's a penny stock type of thing, or somewhere where I'm buying a fraction of a Bitcoin just because there's more backing and value to it at this point in time?
Yeah. So that's a great question, because a lot of people now that's a good question. And I will say this, just as traditional investing, you want to have a portfolio. So if I don't own any cryptocurrency and I'm going to come in, and this is my personal opinion. If I don't own any cryptocurrency, I'm going to come in and start investing. If I know I'm going to be investing, let's say $100 a month for the next year, I would come in now and invest in the risky one. I'll go Shiba. Only reason being, you can get so much quantity for a very, very cheap price. I invested a few dollars in Shiba a few months ago, and I got like 35 million shares.
Yeah.
And to me, I'm like, no, this is, Bitcoin will only have, I think, around 40 million total forever. So Shiba, trillions of billions of coin out there. There's no way this thing will pick up, but it's only $100. I could risk that. So I'd probably do that first. After that, I look at a Doge, and I would do Doge next, because Doge is 100% hype. 100% hype. But we've learned that social media hype is real. So again, if you can get in there and put $100 there, I would do that. Then I'd put $100 into Bitcoin for the next 10 months. Bitcoin is the one I'll continue to put in because it's going to be around. It's been around. It's the gold standard. You're seeing more governmental entities and organizations accept Bitcoin. So I think Bitcoin and Ethereum have right now the best chance of having that overall legitimacy. Now Shiba, Dogecoin, those are like, I'm not sure. So
it's like going to Vegas and pulling the slot machine. You're just hoping that it gains momentum and you make it rich.
Yeah, I could say, I was going to say, if you go back about 30 years on TV, they're like UPN and WB, right?
Yeah.
Perhaps they hit, perhaps they don't hit. Fox at one time, Fox channel was a UPN and WB, right? And they hit, right? So I would say that if you just based off of hype, go ahead and put a couple dollars in there, but always put your smart money in smart investments. And I'll say Bitcoin, Ethereum. First of all, I'm not a financial advisor. Let me say that.
Yeah.
Okay. I'm not giving anybody any financial advice. I'm just sharing my thoughts. And I think those two, Ethereum, Bitcoin, Litecoin, and other ones, they have a history, and they have what I would say a more solid future.
Got it. And that's a good segue as we round third base. I have a couple more questions for you that I think are important. So let's just use Bitcoin, for example. There's Bitcoin Cash, there's other like Bitcoin blockchain. So Ethereum Cash. So like people are like, oh, I want to buy a cryptocurrency. There's 4 different types of one cryptocurrency. Can you kind of explain, and maybe this is repeating yourself a little bit, why that may happen, and what if Bitcoin itself is 40,000, but Bitcoin Cash is $5? Like, why wouldn't I buy the Bitcoin Cash type of thing?
Well, I can go out now and create my own coin called Bitcoin Colin.
So right? There are people mimicking Bitcoin, the OG Bitcoin.
Or Bitcoin, right? Oh gosh, heck yeah. I mean, because at least some people don't know the difference. So if I had BTCT, Bitcoin Colin Thompson, I guarantee you that people, and the price was not at 40,000, and my colors were gold, I guarantee you some people would buy it thinking it was Bitcoin. So one of the smart things to do is try and have a name as close as you can to something else. In this environment, there is no copyright on similarity. So for example, with Coca-Cola, I can't have a red and white can with the Coca-Cola wave and call it COCE. I can't do that because it's too similar. But in this world, yes, you can. Yes, you can. So you have a lot of copycat coins that people support, thinking it's the real thing.
Interesting. And the end game is whoever created that coin is making money off of it, because they're not trying to make an exchange. They're just trying to get that value up enough because they have enough shares where they're making money.
That is the goal, and sometimes it works. And again, in order to get on those major exchanges, because there's the small exchanges people don't know about, and you have to find a way for them to be able to transfer to buy, right? Typically you got to buy to be linked to your bank. So to get on the large exchanges, you got to spend a lot of money. So you're investing a lot up front, and if your token doesn't hit, I mean, with our exchange, whenever we start a cryptocurrency, you have to have X amount that goes into the treasury, so to speak, because you got to pay for servers. There's a lot of things you have to pay for, and if the token price doesn't go up, then you're stuck paying those bills. So a lot of these tokens you see aren't making money, and they won't make money. But some of these, for example, Doge, I think the guys who invested in Doge, they should have made some money because they should have invested. If they didn't sell everything out, because nobody thought Doge was going to do anything, so they may have sold their stake a long time ago. Who knows, right? But I think I hope they made money. But Shiba, yeah, I don't know. I don't know, because there's just so many shares out there.
Yeah. So then, and that takes me to kind of almost my final question is, you talked about making money, but also in our terms, like if I'm buying Shiba, I'm buying Doge, I'm going to buy Bitcoin, I'm going to be able to use it. So what companies out there that you know of so far are starting to accept cryptocurrency as a form of actual payment? And then in terms of if I am buying Bitcoin and then using it as payment, do I have to pay like, my income tax on it, government taxes? Like, do you have some insight into that you could provide the audience as well?
Yes, and I'm writing down the tax thing right here because I want to come back to that. But as you mentioned, you've been in this since 2015, so you have what we call the old man way of thinking, right? Which I'm stuck in also. I'm stuck in also.
It's because we got facial hair, we got that wisdom.
Yeah, yeah. So Grandpa Randy, why do you want to spend it? Why do you want to go places and purchase things with the cryptocurrencies? Why do you want to do that?
Because I want to buy a Tesla, and Elon Musk is letting me buy Tesla with Bitcoin. It's a novelty now to say, I bought a Tesla with the Bitcoin versus saving my cash, because I think my USD probably means more in terms of the longevity than Bitcoin.
Okay. The novelty of saying I bought my car with Bitcoin. I used to say that you have to have, and I have the three things here that if you want to invest in cryptocurrencies, the three things you look for. One, you want to be able to find information on the founders, and the founders should have a product or project they're working on. It's not the coin, it's how the coins are going to be used. So being able to find information online about the founders and the development team, looking at how legitimate the project is, and the first one, having a utility. There has to be a use for the coin. For example, you must be able to use the coin to purchase things. And right now, that's just not the case. You're seeing how this is being transformed, and people are using cryptocurrencies as a temporary store of value and a means to increase the value. Now, a store of value, I'll give an example. If you go to a country like Venezuela, where the peso or the value of their dollar is diving on a daily basis, if let's say they had 100 Venezuelan dollars would equal, say, $1. If they took that 100 Venezuelan dollars and bought $1 worth of, well, let's change that. 1,000 Venezuelan pesos is worth $10. Okay? If they use that and bought $10 worth of Bitcoin, okay? So now they have $10 worth of Bitcoin, and they bought that, so their Bitcoin is now worth $10. Venezuela, they're hit with the shaky government. Next thing you know, that same 1,000 pesos is devalued, and this cannot buy anything. This is now worth, this same 1,000 that was worth $10 is now worth $1. Okay?
Got it.
But because they bought that $10 worth of Bitcoin, they still have $10 worth. If they bought back to the peso, they now have what, 10,000 pesos?
Yeah.
But so what happened was they use it as a store of value to keep its value on the market. So that's where people in those developing countries can buy into cryptocurrencies and provide the cryptocurrencies hold the value. They're avoiding their home country money going what? Being worthless. That's very important.
That's extremely important. Extremely important.
Very, very important. Right. So that's what we call a store of value. It's keeping the value. Now, the other part is people want to buy it because they want to make money. As you said, you think your US dollar is more secure in the bank. Well, it may be, but you're getting, I'm not sure you're getting any interest now. I think now you're probably paying the bank to keep the money there. Mm-hmm. Having that, so if a Tesla costs 40,000 and you say, well, I don't want to take 40,000 out of my bank, I want to keep it there. Well, if you have 40,000 worth of Bitcoin, why not just take that 40,000, cash out, transfer the money into your bank, right? Now, the difference is you got to pay taxes. And with cryptocurrencies, you have to pay taxes on, well, you should in the US pay taxes on every transaction. So if you're moving it from, let's say you have a Coinbase account and a Binance account, and you're moving it from one account to the other, you got to pay taxes on that. So every single time you move it, not even self-move it, you can pay taxes on it. Now, right now, it's not being enforced, it's not being tracked, but the government is coming. They're going to get their share. So you say you want to buy your car. Yeah, you want to buy the car using BTC. Well, you're going to end up buying a car, but you're going to get taxed. I think that right now, buying products using cryptocurrencies, you may end up paying more taxes than you would using regular dollar. Because we don't know that yet, because we don't know what tax rate is going to be. But I would say keep your money in crypto for as long as you can, and if anything, move it from your account to your bank, and know that you're going to still pay taxes on that, but at least have that money in cash secured in your bank. The old-fashioned way of us thinking, let's use this to just buy things. Every time you use it, for example, if you go to one day, you may wake up on the way to work, go to McDonald's, go to Starbucks, at lunchtime buy a sandwich. If you do all these things in the cryptocurrencies, you're paying a lot of taxes that you don't even know about. And most folks say, you know what, the IRS haven't said anything about tax cryptos. Well, yes, they have. They have. You haven't heard about it. Every transaction is taxed. One quick story. There was a young man back in 2008 who said, you know what, I'm Lambo now. He made over $1 million and started spending. The I, the R, the S came back and said, okay, you owe us almost $500,000. He didn't have it. He went to jail. Okay. So you got to understand, the IRS, we know they will not miss out on getting their piece, which is why, they'll get their cut, which is why, think about it, anytime you're moving money into your bank over 10,000, the bank must inform the IRS. With cryptos, with Coinbase, now Coinbase tracks every transaction to your bank, outside of your bank, even if it's below 10,000. I think the reporting number now is $2,000 for cryptocurrencies. I'm not sure, but just know that cryptocurrencies are taxed on every transaction.
Got it. That's unreal information, especially the part about the developing countries. That's really important. So I appreciate you sharing that. So I got one final question for you, and then I know you have something you want to share, so I'll give you the floor before we end. Is, it popped in my head while you were speaking. Two different terms I'd like you to share with people. Burning cryptocurrency. What does that mean? And why would someone burn cryptocurrency? And what does that even mean, type of thing? And then two is storage of cryptocurrency. There's cold storage versus warm storage. Can you talk about what those two are and the differences and the pros and cons of that?
Yeah, so cryptocurrency burning is when you have a token that's giving out X amount of rewards. For example, you have token A. It's called token A. And again, every minute they're generating so many new tokens into the atmosphere. Let's say every minute they're adding, say, 15. After weeks and months and weeks and months and weeks and months, they have a lot of tokens, and it's supply and demand. If you have high supply, you have, well, not supply and demand, excuse me, but if you have a lot of quantity, then there is no demand. People can price your token low because there'll always be a surplus in the market. Now, as the founding team, when we have new coin coming to the atmosphere, part of those new coin come to us internally, because we must be able to maintain the environment. If you have, let's say, 1 million tokens in the atmosphere, and you have people who want say 500,000, the value of their token is going to go down because you have someone on the market nobody wants to buy. So when you do a burn, you're burning to get them to create more scarcity. You're burning to make the ones you have in the market more valuable. And a lot of tokens do this because they don't have big demand for their tokens. And it's not really a burn. What happens is they send that to a wallet that only has an in. There's no way to get the tokens out of the wallet. So you're not burning them, but you're putting them in a hole that can never be they're putting it into a bottomless hole. You can never pull them back out.
Yep, perfect. And that's actually a good
Okay.
segue to the second part is like, what is a
Right.
wallet, crypto wallet, a cold wallet versus a warm wallet?
Right. So you may have heard where exchanges have been hacked and people have lost a lot of money. And let me say that it's not the blockchain getting hacked, it's the exchange, it's the platform getting hacked. So if I have my money, let's say I'm going to say Basecoin. I don't want to use Coinbase, for example. Let's say I have my money in Basecoin. In Basecoin, I have my money at BTC. My wallet, I have BTC, I have Ethereum, I have LightPay coin. Let's say somebody hacks into Basecoin and steals all of my BTC. Well, that is an online wallet. That is the wallet on their platform, which is open to hacks. So I don't have much control over that safety. I must hope they have safety. So that's an online wallet because it's not on my laptop. I must go online or use the app on my phone to access that wallet. You can also have a wallet on your desktop or on your phone, which is called a hot wallet, right? So hot wallet or personal wallet means that I have a application, and in this application, I can store different tokens, BTC, Ethereum, LightPay coin. This is on my hard drive, right? I can go here, double click, I have it. Now, I have control of this. When I turn my laptop off or turn my Wi-Fi off, nobody can access it. It's safe.
Or like a USB drive, just to like give another example as well, something like that.
Well, that's different.
Oh, my apologies. Sorry.
That's different. No problem. So that's on my laptop. The problem there is if my hard drive crashes, or if something happens and I can't access my laptop, those funds are gone. Okay, they're gone unless I have a backup, of course, right? But that's the problem. Now, you mentioned about the USB. So if this was a USB, this is called a cold wallet. Okay, a cold wallet, because this wallet, once I pull this USB out of the hole, nobody can get access to this. Okay, so in order for me to open my application and see my wallet, this must be what? Plugged into my laptop. So plugged into the laptop, I can go look at it, do yada, yada, yada. Once I pull it out, it's safe. If my son comes in here, plays with it, breaks it, or puts in a trash can, it's gone forever. That's it. So you have more security with a cold wallet, right? Cold meaning it's not getting any heat from any device, cold. But if you lose this, that's it. So if I had 100,000, if I had 100,000 in BTC on this, I would put it in the safe deposit box in the bank, okay? Because if you lose this, you cannot recover your money. Yeah. That's it.
And you hear horror stories of that, of people like, I forgot my password, I lost my USB. Oh my God, I had hella Bitcoin on it, and now it's nothing. It's gone.
Yeah, the password or the key, the private key, you can have a private key somewhere else. But going back to the laptop, your computer, or your cell phone, if anything happens to that on your warm wallet, you're screwed. So it's sort of like what we tell folks is have your accounts, right? But always pull your money from your online, the Binance Coinbase, pull your stuff down to your own wallet. Something you can put into your drawer, something that you control. Keep it safe. But if Basecoin gets hacked, now Coinbase has insurance now. So if somebody hacks and steals X amount of money, you'll get that back. But other exchanges which aren't that money rich, if you have your coin stolen from a third party, you might not get it back. And there's nothing you can do, and there's nothing the organization that got the money stolen from can do. All they can say is, we're sorry. That's all you can do. Especially, when you think about it, they may be based out of Europe, South America. You don't know where the company is. And they have there's no legal ways to really get at them because they're in the US. What can you really do to get their money back? So the safest way by far is having a cold wallet. So cold wallet means it's not attached to anything. A warm wallet means it is part of your computer. And an online wallet means you have to go to another third-party online platform to access your wallet.
Great. You are amazing. So much good information, Colin. Thank you so much. For anybody who's a novice to an expert to medium, you're sharing so much information, you're giving stories, and you're really educating the audience. So I think this has been an unbelievable, fantastic episode. I want to give you the floor, last minute or two. Is there anything that you want to share that we haven't talked about yet?
Well, I wanted to share just what to look out for being a smart investor. And we talked about those things, the three things to look for. The one, utility. Is there a use for it? Now, this is old school because now with how people are investing in these cryptocurrencies, it's not really about utility because even BTC, you can't spend BTC in a lot of places. Tesla just said no, right? So that's one thing. But about 3 times a week, I'll get a phone call or an email of somebody saying, Colin, what's the next best cryptocurrency to invest in? Or I want to invest in this. I want to invest in lose money coin. And I'll say, why do you want to invest in lose money coin? And they'll give me typically 3 answers. The first say, they heard about it online and a lot of hype about it. Or they'll say, well, I know a guy who invested in it last year and made $10 million in 2 months. So I want to invest in it also. Or they'll say, well, my cousin's uncle's girlfriend's little brother told me about it. And he told me it's going to the moon. It's going to the moon. And I should invest, but I got to invest now. And I'll tell them, I said, look, if you invest based off of these reasons, just prepare to lose money. Because one thing about this new age of cryptocurrency investors, they're investing off emotion and hope. Now I'm going to say emotion, hope with a lack of patience. So they want to invest now and make money in a few weeks to a few months. Not invest now and make money and see their investment increase over a number of years, which is how most investors, once you're a day traders is different. But if you're an individual investor looking to make money, we all know it takes years. Bitcoin was at $3,000 last year. In 2018, Bitcoin was at, let's say, up to 11,000. Some of the people who bought at 11,000 got upset and sold at 5,000. And they're biting themselves right now.
Yeah.
Because now, right. But if you invested and just left it alone, leave it alone. And it's hard to do when you're not investing for the long term. You're investing because you saw somebody who made it rich over an 8-week period, and you want to do the same. So your patience, anything over 8 weeks, isn't there, and you may panic. You may sell too soon, or you may just make some bad investments. You may, you know what? This Doge thing, I don't know what Doge is, but I know I'm seeing it everywhere. Elon Musk said, do it. I'm going to, if I don't tell my wife, I'm going to take a rent, which is due in 3 weeks. I could probably double it in 2 weeks. And because they don't know what they're doing, they should know that once everybody buys in, what happens? The people who have it sell.
Yeah. They
sell, right? Because the smart people know that, look, if any token is at an all-time high, sell some of it. Because people, it's all-time high, I mean, the early investors have made so much money, they're going to sell. And once they sell, they're flooding the market and the value goes down. So they have to understand how these things work. So I will say this, invest using a small amount of money first and just see how the market operates. Watch it. If you're able to not watch it, if you're able to look at it once a week, congratulations. Some people are looking at the prices every hour and thinking about what's that doing to their mindset, especially to have a lot of money invested. So my last comment here is, if you're not able to master your emotions, if you're not able to not get caught up in FOMO, fear of missing out, if you're able to use this opportunity as a ways to learn about cryptocurrency and investing, because it's going to be here for a while. There's no rush. There's absolutely no rush. Just start smart and start looking for the long term. So Randy, those are my comments, and I hope your audience appreciates my info today and whatnot.
You have been amazing. I think that is the best thing to end it with is you gotta be smart. Don't go out there and mortgage your house and try to hope that you're gonna make it rich. Don't go spend your rent. Like, do it if you're gonna do it in moderation to what you can do. And they say like maybe you should have like 90% in the stock market or the housing market, have 10% in the cryptocurrency, so you're hedging what you currently have. And
Right.
I think that's a great thing to end it with. Colin, if people want to find you, if they want to reach out, if they want to learn about what you're doing, how can they find you?
Yeah. So in terms of the blockchain side, they can go to www.XChainz, XChainz.io. It's in the bottom there.
Yep.
And look at what we're doing there. My email is cct@xchange.io. That is my blockchain side. I also do coaching, training, and whatnot. And that is oligye.com. oligye.com. So if you go to that platform, you'll see what I do as far as life coaching, as far as training and whatnot, and a lot of podcasts and speeches I've made as well. So very easy to find.
Awesome. And I'll have all the links in the bio if you're listening on Spotify, Apple, YouTube, all the links will be there. Law family, thank you so much. Some episodes are a little bit more fun, some a little bit more serious. This was an educational episode for you guys. This was a fan ask to make sure we talk about cryptocurrency, and Colin has taken us to the moon about cryptocurrency. Hopefully your cryptocurrency wallets will get to the moon as well. All right, Colin, thank you so much. Law fans, thank you so much. Please like, subscribe. Please get us to the moon. Colin, we're going to go ahead and do the sign off, so I'd like you to repeat after me. Stay healthy.
Okay. Stay healthy.
Stay wealthy.
Stay wealthy.
And have a good week, fans.
Have a good week, fans.
Deuces.
Deuces, bitches.
Bye, everybody.